Hello everyone, and welcome to another episode of Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and it's the 13th of August, 2025. Alright everyone, let's get into it. So I'm back after a couple of weeks of not doing a refuel, and boy is there a lot of stuff to get through. I guess you all are very aware by now that ETH is almost at all-time high. I think it's down like 4% from all-time high, which is basically a sneeze away. And at time of recording, the price of ETH is 46.40, which is insane because that is the highest price that ETH has been since December 2021. It has been a long time since ETH has been at this price, but we obviously all know why this is happening. You know, we have record ETF inflows coming in. We have lots of ETH treasury companies buying a lot of ETH, but I'm going to talk about all of that later in the episode. But just to give you an explanation as to why it's been a couple of weeks since the last refuel, I was actually away in Queenstown, New Zealand for the last week, celebrating my 15th anniversary with my fiance. So I was there from August 6th to yesterday. So I just got back yesterday. And then before then, I was actually planning to do a refuel before I went away, but it just didn't happen. I just ran out of time and I didn't get one done, which I kind of regret now because there was a lot that happened, you know, in the week that after I did the last refuel. And now I'm like having to cover everything over the last 2 weeks, which is insane. I mean, I had to stop myself from opening more Chrome tabs here. I had like a lot more than this open and I closed a bunch because there's just so much that happened. But it kind of feels like a lot of the stuff that happened is already really old news, which is insane here. But yeah, I'm back here today to go through it all. So I guess without further ado, let's talk about one of the most bullish things that's happened over the last few weeks, which is the ETH treasury companies that have just been relentless in the amount of ETH that they're buying. Now, I don't know if I mentioned this on the last refuel, but Tom Lee, who is basically working with BitMine here, said that he wants to own 5% of the total ETH supply. Yeah, I think I did cover this last time. So that is a lot of ETH, guys. That is around 6 million ETH, I believe. And now they have 1.2 million ETH. So they announced that they've been able to somehow buy a lot of ETH over the last couple of weeks. And it has obviously reflected in the price of ETH. I remember, I think on the last refill, people were asking me, why isn't ETH going up? You know, it's at 3,700. Why isn't it going up with all this buying happening? And I remember saying at the time that, guys, like, it takes time for this buying to actually be reflected in the market. And it did. It took a little bit of time. It hasn't taken that much time. It's taken like 2 weeks or something, right? But it has been reflected there. And it's still going to keep going up from here, guys. Like, I mean, you guys know my targets for ETH and kind of like how bullish I am on ETH generally. And honestly, I think once we're past all-time high, it's going to be anyone's guess where we kind of go to before we have any, I guess, meaningful pullback. And what I mean by meaningful pullback is that we had one at like 3,800, right? I think ETH went to 3,700, 3,800, and then pulled back to, what did it pull back to? About 3,350, but then just like continued on from there relatively quickly. What I mean by meaningful pullback is that we have like a massive crash. Let's say that ETH goes down 30, 40% or something like that. That's huge, right? And then it stays down for months at a time. That's what I would consider a meaningful pullback. These pullbacks of like 15% and then like a few days later, it's going back up again. That's not a kind of meaningful pullback to me. That's just like a bunch of profit taking, some longs getting wrecked, right? And then we continue on from there because we have all of this buy pressure. Now, going back to what I was saying about Tom Lee, he owns, well, I guess like BitMine currently owns 1.2 million ETH. Now, as I said, 5% of the total supply is actually 6 million ETH. So BitMine has to buy another 4.8 million ETH to achieve their stated goal. Now, as I mentioned last time on the refuel, to do this is really difficult because they can keep buying ETH, but they're going to keep pushing the price up because not only are they buying ETH, you have Sharplink buying ETH, you have Ether Machine, you have Bit Digital, you have a bunch of these other ones. They're buying ETH, as much ETH as they're trying to get their hands on, and they're all doing it at the same time. So that's why the ETH price is getting pushed up higher and higher. So anyone who's saying they want to acquire, you know, X amount percent of the total ETH supply, it's a moving target. And I think I did mention this last time on the refuel about how, you know, ETH price doubles from here, it becomes doubly as hard, right? You need to raise double the money, you need to acquire double the dollars to be able to put it into ETH in order to get to your stated goal here. I honestly think that BitMine stands a chance of getting to 5%, but it's going to be really hard for them to do that. I don't think the others are going to be able to get there. Like, they're already pretty far behind in terms of, I guess, like, I mean, by far behind, I mean, like, for example, Sharplink has 600,000 ETH, right? So if they want to get to 6 million ETH, they need to buy another 10 times more ETH. But the thing is that if you have BitMine trying to buy 4.8 million ETH, right? You have Sharplink trying to buy 5.4 million ETH. You have Ether Machine needing to buy even more than that to get there. You have all these other ones like BitDigital, ETHZilla, BTCS, etc., trying to buy as much ETH as they can get their hands on. Like, what do you think that's going to do to the price? I mean, it's pretty obvious what it's going to do to the price, right? The price is just going to go astronomical if they're able to raise the money to keep buying this ETH, of course. And so the target just keeps moving. So I do think that BitMine has a chance. Like, I don't know if I'd consider it a high chance of getting to 5%, because the price is just going to get ahead of them, right? And they're not going to be able to raise enough money fast enough in order to gobble up the supply in order to get to that 5%. And I just don't think any of these other treasuries are going to get there. Like, as aggressive as they want to be, it's just too much money, guys. Like, ETH is not a small asset. It's worth over $500 billion now. So 5% of it is, $25 billion, right? So I know that BitMine said they want to raise up to $20 billion to buy more ETH with, which is what they actually need at current prices to buy another 4.8 million ETH. But there's no guarantee they're going to be able to raise that. And also, if they do raise that, it's probably going to take multiple months to get there. Who knows what the price of ETH is going to be in a week, let alone a month? Imagine, if you will, in a couple of months, ETH price is double from here. Well, then BitMine no longer needs $20 billion. They need $40 billion in order to get to their stated goal. So I don't know. I just don't see it happening. As I said, I think BitMine has maybe a chance. It's not a high chance, but the other ones, nah, there's no way. And this is actually a good thing, by the way, guys. We don't want any one entity owning too much of the ETH supply. So it's a really good thing that it's actually becoming much harder for any entity to own a meaningful percentage of the supply here, especially because these entities want to stake the ETH too. We don't want them having too high of a share of stake. I mean, for them to get to the critical threshold of 33% is impossible. Like, there's none of these entities are getting there. It's just not happening, right? But like, even getting to 5%, right? We don't want that. Ideally we want them to be below that. And I'm just glad that I think they will be. I'm glad that multiple treasury companies exist. Now, there is actually one other thing I wanted to talk about when it came to the treasuries as well. And this is to put a little bit of a, reality check on things. Not a damper on things, but a reality check on things. I'm going to say that most of these things are going to fail long term. And the failure case for these things is not necessarily that they blow up or even that they trade at a discount. Their stock price trades at a discount to their NAV. It's more the failure case is that they're just not able to raise money to buy more ETH with because they have to compete with these bigger players. If I was to kind of like put money on which players were actually going to be around in 5 years from now, there's only like a handful of them here. I would say that BitMine, Sharplink, Ether Machine, and ETHZilla are probably like the best contenders, but BTCS has been around for a very long time now, so I actually think that they're still going to be around too, and they're going to be really good. But these other ones, they're just too new. A lot of them are trend chasing. BitDigital is great, but like as far as I know, I think most of their holdings came from trading their BTC for ETH, or their existing holdings for ETH. So it's going to be interesting to see how they raise money going forward and how successful they are there. But yeah, the long tail of them definitely not going to do too well, I think, because there's just not enough money. It's too spread out here. And the same goes for, I guess, the BTC treasuries too. I think that Saylor has, I guess, like most of the AUM of all of those, and he's still able to raise more and buy more BTC, even though it is slowing down relatively, I think. But yeah, that's still going to keep growing. And then you have all these other DATs for other tokens. I saw that Story Protocol has one now. Like, these long tail kind of assets getting these treasuries, guys, I'm very bearish on these things. I really do not think that they, one, need things like this because they're not strategically important assets. Two, they're basically grifts and they're ways for people to exit large positions in these kind of, I guess, like insider VC raises and things like that. And three, like, I just don't see the demand there for them like there is the demand for ETH and BTC, for example. Like, I just don't see it. So yeah, maybe, as I said, like a reality check there, not to put a damper on things, but those things can all still be true while the bigger players are able to raise more and more money in order to buy more and more ETH with, which I think they're going to keep doing. I think that they're all going to be doing this for many years to come. This isn't to say that ETH is just going to go up only for years, but I do think that ETH is going to reflect a lot of what BTC did over the last 18 months in terms of price action. And then after that, it's kind of anyone's guess. And Obviously, as you guys know, I'm long-term bullish on ETH. I think ETH is just going to go up only for over longer periods of time, but that doesn't mean that there's not going to be dips in between, right? It doesn't mean that there's not going to be periods of prolonged downturns in between. It's just how these things work. And actually, the last thing about the treasuries, and I just thought of this now because it's a question that I'm getting more and more of, is people asking, okay, well, how long until one of these treasury companies starts selling their ETH, whether that be for dollars or for other assets? And I'll be honest, guys, I am fully convinced that the bigger ones are just not going to sell this ETH anytime soon. Two main reasons. One, they've just gotten started. It's only been like 2-3 months of this. But secondly, and more importantly, these treasury companies for ETH are not like the BTC ones. The BTC that these companies are buying, they can't do anything with that BTC, right? But with ETH, you can do a lot of things with it. And this is actually another bull case for Ethereum as a network as well, and why I believe the Ethereum network's DeFi TVL is going to explode, is that when you buy ETH, you stake it, right? You can just stake it. You can just do that and that's it. Or you stake it, you get an LST, and then you use that LST within DeFi. You borrow against it. You put it into different kind of AMM pools. You mint stablecoins against it. You can do all this stuff on-chain with your ETH. So ETH is obviously a programmable store of value. As it has been memed, it is a productive asset. So why would you sell your ETH? Even though the price has gone up a lot, why would you bother selling the ETH when you can continue to generate extra yield on top of what an extra, I guess, like money using that ETH, which will be reflected in the, I guess, like stock price, and it'll lead to a premium on your stock price. And then what you can do from that is you can actually raise even more money to buy even more ETH with to keep this flywheel going. Now, of course, the yields will compress over time, the returns will compress over the time, the premiums will compress over time. They're probably not ever going to get to like a zero premium unless like ETH crashes spectacularly, goes down a lot, and like it did, I guess, at the start of the year or something like that, right? That could lead to a more prolonged downturn here. But for the foreseeable future, it stands to reason that there's a lot of capital that wants to come into crypto. A lot of it, I mean, I would argue most of it, especially in the TradFi world, has zero exposure to crypto, let alone ETH. And that's all coming in. We had the other day, Trump signed an executive order to allow 401ks, which is the US retirement accounts, to invest into crypto directly as well. So there's just all this sidelined capital, all this money that still has to come in, trillions and trillions of dollars of it that still has to come in. And they're either going to go in via the ETFs, or maybe they're going via the treasury companies, or maybe both, that I feel like this flywheel can keep going for quite a while. And that's going to lead to a lot of a wealth effect too, because not only are you going to have the wealth effect from ETH going up and a lot of people getting rich off ETH going up, you're going to have a wealth effect that trickles down to the rest of the Ethereum ecosystem. Because I do believe that there are some really unique opportunities out there today in terms of DeFi tokens that you could be buying that could do very well over the maybe next 12 to 18 months. I'm not going to name them here, guys, because I don't want to give investment advice here, but I do own some of them, and I'm not going to name them explicitly because then it's going to be me pumping my bags. But I do think there's opportunities out there if you know what you're looking at. And I do think that these things being quiet and not doing anything for months doesn't mean that they're not going to be good investments long term. I think that what you're going to need to see play out is just like ETH going up a lot, wealth effect from that, all the on-chain activity going up as well from what I just spoke about, and then that flowing onto the relevant tokens, that flowing into other areas, and everything just kind of going up only from there for a while. But I guess, as I said, don't get caught in the up only kind of mantra. Don't get caught in being too bullish. You always need to look after yourself as well and look after number one. As I've said plenty of times over the years on the Refuel, when you're selling things, when you're taking profits, you need to be understanding why you're taking profits. If you're selling, let's say ETH goes up a lot and you start selling ETH and your idea is, I'm going to sell ETH here and then buy back when it's lower. That is a trader mentality. That is not necessarily an investor mentality. Yes, you can try and play these things as an investor over the long term. Let's say you've been holding ETH for like 3 years and you're like, okay, well, ETH's 10K now. I'm going to sell all of that because I think ETH's going to dump and go back to like 7K and then I'll buy back in. What you need to understand is that that's a risky thing to do for starters, and that it's very hard to do that. And that's why there's not actually that many successful kind of traders and investors out there, because a lot of people think they can do it and then they don't realize that It's much more difficult than they thought it was. Whereas the flip side of things is maybe you're just taking profit because you want to buy something with it. And that's actually, in my opinion, the best reason to take profit is that, okay, well, you're up a lot and you think to yourself, I can materially improve my life with the money that I've made, so I'm going to sell for that reason. So you sell to buy a new car. You sell to buy a house. You sell to pay down your mortgage if you already have a house. You sell to help out your family and friends. Whatever reason you have for selling, when it comes to actually using that money for something else, no one should judge you on that. You shouldn't feel bad for doing that because you have a reason there for selling beyond selling to hope and buy back in later. Because my belief is that ETH is going to, over the longer term, be the best way to preserve your wealth against, especially against fiat. I mean, fiat is absolutely trash. Like, we all know this, right? But also against most other assets, if not all other assets in the world, but always over the longer term here. But that doesn't mean that sometimes I don't think to myself, hey, maybe I should sell some ETH to buy back in later, because the only reason I would sell my ETH would be to buy back in cheaper. But then, I don't think that this much anymore, but I used to in the past when I was like, I guess, less experienced. But then I thought to myself, well, why would I do this and risk the ETH that I already have when I could just like make money in other ways and then buy more ETH with it? And yeah, maybe like I wait a little bit to buy ETH. Maybe I think ETH's getting a bit too overheated over the short term. So instead of buying now, I buy later. I haven't done that recently, actually. I've been buying a lot of ETH, and I'm even buying here, guys, because I just don't see this train stopping for the foreseeable future. But at the same time, it's up to you. It's up to you what you want to do. It's up to you how you want to play it. But always remember that if you invested with the purpose of at some point taking profits in order to buy something such as a house, car, whatever it is, remember that's what you did, and remember to take profits. Don't get caught up in even as bullish as I am, as bullish as everyone is, don't let that, I guess, kind of influence your decisions when it comes to looking after yourself, because no one else is going to look after you guys. No one's coming to save you. You have to look after yourself. You have to make your own decisions, and you have to be happy with those decisions as well, because there's going to be periods of time where you sell and price just goes, way up from where you sold. You have to be content with that. You can't sell and then price go up and then be like, oh shit, I shouldn't have sold, and then buy back in. Well, now you've got less ETH than you had, way less ETH, because you're probably paying taxes too, because you have to account for that, right? And now you're like kind of chasing, which is really bad because it puts you into a bad emotional headspace. You start thinking, shit, I have less ETH than I had then. Oh, I got to buy more ETH to make up for that. Oh, I got to do this. I got to trade. I got to take on leverage, which I've seen people do, mind you. And yeah, it all kind of like spirals out from there. But anyway, enough on the treasury companies. The next bit of bullish news with regards to, I guess, like buying of ETH is the ETFs. These things have been on an absolute tear lately, guys. We had yesterday the first $1 billion inflow day for the ETH ETFs, as you can see here. And it was the largest inflow day for the Fidelity ETH ETF ever. I think it might have been the largest inflow day for the BlackRock ETF as well. So BlackRock got $640 million of inflows yesterday for the ETH ETF. Fidelity was $277 million, all up just over $1 billion. And then today we had over $500 million into these things. Total for the week is now at over $2 billion, and we still have... What's today? Yeah, it's Wednesday for me, which means it's Tuesday in the US. So we still have 3 trading days left of this week, guys, which is crazy. And sorry, I should say this $2 billion is from the last 2 days of last week. So if you're just including this week, it's already at $1.5 billion. So, by the end of the week, it could be $3 billion of total inflows for the week, which will be a record week, of course, there. Now, the more interesting story than just the inflows for the ETH ETFs is the fact that the inflows are actually much larger than the BTC ETF inflows. So yesterday, the ETH ETF inflows were 5 times that of the BTC ETFs. Today, they are 8 times the inflows of the BTC ETFs. And you can actually go to on Farside here and look at Bitcoin. It's actually kind of funny when you look at this and look at the difference here. So the BTC ETFs today only had $66 million of inflows, where the ETH ETFs had $523 million of inflows. So clearly a kind of trend shift is happening here. And it's logical because ETH is going up a lot. ETH is going up against BTC. I mean, ETH is still not even at all-time high, which is crazy to say. And BTC has basically been range bound between 124k and 112k for a while now. Actually, if I go look at this chart, it's been 2 months of that now, and during those 2 months ETH has basically gone up only. So it's logical that the ETF flows are reacting to that. I'm curious to see how long that lasts for, right? Like, how long does ETH continue to outperform BTC? The dynamics here are very different as well, because as you guys know, I put out a tweet every other day, kind of saying how much of the supply the ETH ETFs are eating each day. So on average, the Ethereum network issues around 2,500 new ETH per day, which is nothing, guys. Like that's like what, $10-11 million a day. The BTC network, the Bitcoin network issues, last time I checked, like anywhere from 50, I think it's at least over $50 million of BTC per day. I think it's much higher than that, actually. I don't remember what it is off the top of my head, but it's a lot more. It's at least 5 times at minimum more than what ETH issues per day, right? So when you have an enormous amount of demand coming in, which is like, I think it was yesterday, it was like 94x from just the ETH ETFs, 94x more demand than there was new supply issued. So when you have like such a supply crunch and you have all this insane demand coming in, like it's only logical that ETH is going to continue to go up. And I actually argued this. Remember when I argued this years ago when I said that ETH supply dynamics are just stupidly bullish, but it did rely on that demand being there? Because at the end of the day, you can have the most bullish supply dynamics possible, but if the demand isn't there, then the price isn't going anywhere. And I it's funny, I used to argue this so much, and people would kind of come back at me with, oh, we need to lower the ETH issuance. It's not low enough. This is why it's suffering against BTC, which I always thought was insane. Because if you actually look at the last couple of years, I guess you could say, if you look at 2024, for example, ETH went down a lot against BTC. ETH went down a lot against Solana. Solana has 7-8% inflation on the token, right? BTC has more than ETH, like much more than ETH, I think. Not that high, but like much more than ETH, right? So when you look at it from that perspective, it wasn't the supply problem, it was the demand problem. ETH didn't have the macro buyers like BTC did, and it didn't have the degens because it didn't capture the meme coin meta like Solana did. But now we've captured the macro buyers in a really big way, more than BTC is getting these days, right? And then the crypto native buyers aren't really having an effect because the market cap is so big. We just needed the macro buyers. So the crypto native buyers can keep buying other stuff, which, maybe they'll see some success there, maybe they won't. But ETH having the macro buyers is the most bullish possible thing for ETH. And that's why you're seeing ETH perform so well here. So when you bring this all together and you include not just the ETH ETFs, but also the treasury companies, right? They're buying hundreds of thousands of ETH per day. The network only issues 2,500 new ETH per day. So just do the math. And I actually did the math on this yesterday. The ETH ETFs yesterday alone bought over 50% of the total new issued ETH since the merge. So net issued new ETH since the merge. Over 50% in one single day. If you account for the last 3 trading days of the ETH ETFs, they bought more ETH than was net issued since the merge. Like all of it. And that's just the ETFs. There's not into treasury companies as well. So the supply is just so constrained. We have such a massive supply crunch and we have a stupid amount of demand. I don't know, guys. Like, you do the math on that. What do you think ETH's going from here? I think I know where ETH's going from here, but yeah, again, I got to like temper some bullish kind of talk here because I want you guys to keep remembering that you do need to take profits at some point if you invested with the reason of taking profits, because there's different reasons to invest. Invest to take profits at a later date, invest to sell, then buy back in cheaper, or maybe you're investing because you believe that this is what you want to have for the long term. You're just buying, you're like, okay, I'm going to buy ETH and I'm sitting on it for 10 years. I'm sitting on it for 15 years. This is the best way to preserve my wealth. That's my strategy. Maybe it's yours. I don't know. You have to decide for yourself what that strategy is there. But anyway, moving on from that stuff to another piece of really bullish news that came out. That's actually really old news now. This is 2-week-old news, but I needed to talk about it. So the SEC published something a couple of weeks ago called Project Crypto, which is essentially what they've kind of put forward as an initiative to provide, I guess, clear guidance for crypto within the US here. So the TLDR is basically that they want to bring, or the SEC wants to bring crypto activity back to the US with this new project. They want to introduce clear rules for all kinds of on-chain primitives such as tokens, NFTs, stablecoins, and more. Clear guidance will be given on what is a security and what isn't. I mean, finally, right? safe harbor for companies doing ICOs and airdrops will be given. I guess, again, finally, they want to allow trading platforms and exchanges to trade both securities and non-security tokens and do DeFi plus staking services and much more, which you can check out the report. I'll link in the YouTube description below and you can see what's happening there. So pretty insane stuff here, guys, right? Like pretty insane that last year the SEC was trying to kill crypto, and in particular, they were trying to kill Ethereum. Whereas this year, and like with the new leadership, the SEC is doing the exact opposite, right? They're trying to, I guess, help crypto as much as they possibly can, which is pretty insane because that's like Blockworks level of flip-flop, right? That's some pretty extreme flip-flopping there. But I guess when it comes to the SEC, it makes sense because last year, the head of the SEC was Gary Gensler. This year, it's Paul Atkins. I think that's his name. And he's very pro-crypto. And obviously, the Republicans are very pro-crypto. So it's all pro-crypto here. So I just figured it was worth kind of mentioning that I guess, like, big shift that we've seen there. Because this is something that may not be considered bullish short-term. Or at least people are going to forget about it short-term. But long-term, it is extremely bullish, guys. Like, and I really hope that they can get all of these new laws and regulations in place before a possible kind of admin shift potentially next year. I know that the US has the midterms next year, and then obviously a couple of years after that, or I guess like in what is it, 2028 or something like that. There's a new presidential election, and maybe the Republicans lose and Democrats win. I don't know. And if the Democrats are still hostile towards crypto, you know, you bet your ass they're going to try and kill it again, right? So we need to make as much progress as we can in that 4-year window that we've been given since Trump kind of won the election there, and we'll see how that goes there. But I'm pretty confident that the US is on the right track here finally. All right, another thing that I didn't report on because the last refuel was on July 28th was Ethereum's 10th birthday. So Ethereum turned 10 on July 30th back a couple of weeks ago now, and it was quite a good I guess like timing on that because ETH price was going up, right? So everyone was already bulled up a lot. And then you had this just ridiculous bull post from Justin Drake, which I wanted to focus on. So I'm not really focusing on Ethereum's 10th birthday. I think, you know, that's really old news now. We've all celebrated it. 10 years of 100% uptime. Really great. Awesome. We love it. But what I really liked was this bull post from Justin Drake, because it's not a bull post about ETH necessarily, the asset. It's a bull post about the Ethereum network. And he broke these down into different things. So this is basically what his view of Ethereum is over the next 10 years. And as you guys know, Justin likes to look pretty far out. He doesn't want to kind of focus on the day-to-day. He wants to focus on the decade-to-decade, which I love. I've always loved that Justin does this. So he split up the next 10 years into 3 main kind of categories here. So essentially, well, not 3 main categories, but like he's got a bunch of different categories here. But the main categories, and the reason why I'm categorizing it as 3 different things, is that he said that Ethereum has a defense mode called Fort Mode. It has an offense mode called Beast Mode, and then it has like a third category of 3 things that is kind of lean Ethereum, he's calling it here. So what does he mean by this? Well, when Ethereum is focusing on, and when you talk about Ethereum's Fort Mode, it basically talks about its economic security, right? It's hundreds of billions of dollars worth of economic security, which is the ETH that it has staked. And it's also about Ethereum being able to survive anything, nation states, quantum computers, nuclear war, whatever it is. That's Fort Mode. That's what Ethereum is optimizing for. In that respect. Then there is Beast Mode, which is Ethereum being on the offense, which is essentially scaling the L1, scaling the blobs, making sure that we can go to 10k TPS on the L1 and then go to 1 million TPS on the L2s, right? And we're doing this through gas limit increases. We're doing this through ZK and shortening slot times and blobs and PDAS and all that good stuff there. So he's calling that Beast Mode. And then he says, scale versus decentralization. Why don't we have both? The moon math we need is now tamed. We have real-time ZKVMs for lean execution and data availability sampling, or DAS, for lean data. And Ethereum has a roadmap for this. He's calling lean upgrades. So essentially, we're going to do lean consensus with the Beacon Chain 2.0, which is going to be hardened for ultimate security and decentralization, plus finality in seconds. It was formerly known as the Beam Chain, which I discussed after his talks about this at DevCon in Bangkok there. Lean data, which is blobs 2.0. So essentially doing things like post-quantum blobs, essentially scaling up blobs to be able to service the L2s, and then lean execution, which is all about either EVM 2.0 or ZK and things like that. And this is basically all being done with the goal of having performance abundance under the constraint of non-negotiable continuity, which is obviously the 100% uptime, maximum hardness, and refreshing simplicity. And then there's a few other things here, which I'll link in the YouTube description. I'll link the tweet in the YouTube description below for you to have a look at, such as lean cryptography, a lean craft, and a lean legacy. This post really got me bulled up, guys, because I think when you look at, I guess, like the next 10 years of Ethereum, and if you were to look at Ethereum in 10 years' time and then look back at what it is today, it's actually going to look quite different. It's going to look the same in respects to what we actually want Ethereum to be: decentralized, 100% uptime, censorship resistant, all that good stuff. But it's going to be looking very different to how, under the hood, right? We're going to have ZK everywhere. We're going to have blobs everywhere. We're going to have native and based rollups everywhere, right? We're going to have quantum resistance everywhere. We're going to have better, I guess, cryptographic primitives at the L1. We're going to have better scale at the L1. We're going to have shorter slot times, all that stuff there. And it really would feel like an Ethereum 3.0. I know people don't want to kind of meme this into reality because it can get fudded to death, just like anything in Ethereum. But it really will feel like we built Ethereum 3.0, even though it's not being branded as that. And I think what I like about that is the fact that this is, because ZK is kind of considered the end game here, this is considered the, I guess, like, end game of Ethereum. So once we get all of this stuff delivered, the Ethereum protocol will most likely be pretty much ossified at that point. And what I mean by that is that there won't be any major upgrades anymore, unless they're upgrades for probably like security things or critical vulnerabilities and stuff like that. But in terms of like the Ethereum protocol itself, it'll be small incremental upgrades going forward, and Ethereum could be considered done as a protocol. Now, we obviously don't want to ossify too soon, and we don't want to ossify too late either. And I know that 10 years sounds like a long time, but at the end of the day, it can go very, very quickly. And, if you kind of, I guess, like, blink, you'll miss it, to be honest. And I think a lot of this stuff is actually going to get delivered in less than 10 years. I would argue that most of this stuff can be delivered in 5 years or less. And I think when you're looking 10 years out, you're probably looking at things that are more exotic, things that are maybe nice to haves. I mean, Vitalik had this on his original roadmap of Ethereum, which the flowchart roadmap, which is still out there. But yeah, if I had to kind of put money on it, I would say that we could get most of this within the next 5 years. We will not have to wait 10 years for this, which is even more bullish, of course, right? But anyway, you can go give this tweet a read for yourself. I'll link it in the YouTube description below for you to do so. All right, so as you guys know, the Ethereum Foundation introduced something called Protocol in June. So this is a couple of months ago now, which is a new structure to align the Ethereum Foundation around 3 strategic goals: scale the L1, scale blobs, and improve the user experience without compromising on hardness or security. So Tim Taiko posted an update about this on Twitter, which I'll link in the YouTube description below, about where they are today. So the first major update was that Marius here from the Geth team is actually co-leading the Scale L1 work alongside Ansgar here now. So that's actually really bullish because he obviously has a lot of hands-on experience with the execution layer working at Geth and with scaling things up, because he's been focused on that for a very long time now. So him leading that effort with Ansgar is honestly a match made in heaven, which is really awesome to see. So the main short-term goal of scaling the L1 is to get to 100 million gas, as we all know. Parathosh is owning the effort internally at the EF and is working closely with the Nethermind team on performance benchmarking, and there's a write-up here for you to check out. Another key milestone is history expiry, which is what Light Clients is working on and coordinating this work. With pre-merge history now dropped, it saves 300 to 500 gig in disk space. So they're starting to work on rolling history expiry now, which will keep node sizes manageable long term. And what rolling history expiry means is that you're going to have like a set date where you'll just expire history from, and then that will be rolling as time goes on. So you will only ever kind of keep, let's say, 1 year of history or something on your node, and then anything older than that will get kind of rolled out and expired there. You can, and this is optional, by the way. I mean, it'll probably be the default to expire it, but you can change it like you can with blobs, so that you just keep the history. I'll be doing that. I'm not going to be giving up the history. I still run an archive node, guys. Like, I still have my Geth archive node, which is actually, I think, the reason why I'm always number one when it comes to the Rocket Pool a snapshot each month. I always publish, my node always publishes it first, and I think that's because I have a full-blown archive node still, which is really cool. So I'm keeping that running. It's a Geth archive node. That's just going to stay there until I, until I die, basically. I have no reason to change that there. And then there's a few other things going on as well, but I won't read through this all. I'll just link it in the YouTube description below. But yeah, things are happening, guys. Things are moving. You know, it's not just the ETH price that is moving. It's also all of the development that's happening, and there is a lot happening. So yeah, you can go check that out. I'll link it in the YouTube description below for you to do so. Another thing that's happening on the core dev side is an EIP was proposed, which it's not EIP quadruple zero. I think it's EIP 79999. 739s, which was proposed here by Anders and Vitalik. So this EIP is all about bringing a unified multi-dimensional fee market to Ethereum. Now, this has been a long time coming, guys, and you can go give the EIP a read for yourself. I'll link it in the YouTube description below. And there was also a thread that I retweeted that I haven't got up here that basically goes through this. So essentially what this is basically what's been talked about for a while, and what actually Solana has with the SVM is essentially separate fee markets for different things that happen on the EVM here. So essentially, at least from my understanding, what could happen is that like stablecoin transfers, or I guess like token transfers, would have their own fee market, or at least have their own kind of like stake contention, as opposed to something like an AMM trade. So it wouldn't just be all one gas market, it would be different gas markets. So it's the easiest way to explain this actually is like what we have today with blobs, where blobs have their own fee market, right? We already have multi-dimensional fee markets within Ethereum. It's blobs have their own fee market, and the rest of the normal kind of L1 transactions on the EVM have their own fee market. The idea is to extend this out to all of the kind of major primitives and have it so that each thing has its own fee market here, so that it doesn't kind of, I guess, like affect other things. So if there's one part of like, I guess like hot state over here, it doesn't affect the other part that's not as hot. And this, as I said, is already something that Solana has with the SVM. It's something that I've actually wanted in Ethereum for a long time now, and I've given kudos to Solana for having this for a while. I think it's really good. There are some, I guess, like weird negative externalities to worry about. You could say that if for example, the, I guess, like fee market for token transfers or stablecoin transfers, for example, or some other part of state is basically free, and then the fee market for this other part of the state is really expensive, you could say that fee market is subsidizing the other one, and that use case is subsidizing the other one. We already have this today, where you could argue that the Ethereum network as a whole is subsidizing blobs, because blobs are free. So essentially, ETH stakers are subsidizing it, and I've said that this is because blobs are a loss leader. I wouldn't use that argument for the other, multi-dimensional fee markets. Would say that the reason why you would want it is because you're able to separate things out so it doesn't degrade the user experience when one part of the state spikes and the other doesn't. So I think the trade-off is actually worth it, but there are some kind of like weird esoteric trade-offs here that need to be probably discussed, which I'm sure the discussions are going to be had as time goes on there. All right, so I wanted to highlight this tweet from Benji here, which is all about, I guess, kind of like enterprise Ethereum. So for those of you who don't know, there is an internal team within the EF that's actually focused on the enterprise side of Ethereum now. And the EF didn't have this like, 5-6 months ago, but now they do. And Benji was asking one of the people that works within this team, David here, basically saying, who did you talk to last month? And David said some of the biggest banks, tech firms, and governments in the world. And then he asked, Benji asked, did they actually want to listen to us talk about Ethereum. And then David replied saying, they're not just asking us what Ethereum is anymore, they're asking how to integrate it, how to ship, and how not to get left behind. And we're here to help every step of the way. That's pretty cool. And there was actually I think there's going to be a Twitter space done, or there was a Twitter space done about this that you can probably find on Binge's profile here. But the reason I wanted to highlight it was just to let you guys know that there actually is a team inside the EF talking to these people now. David is part of it. Ash here is part of it as well. I don't know all the team members, but this is bullish, guys. This is really bullish because we didn't have this before, and now we do. And we also have Etherealize, and we also have these other, I guess, like entities that have the treasury companies like Sharplink, for example, and Consensus obviously being closely tied with Sharplink. You have Bitmine, so on and so forth. It's all a very big deal for Ethereum, that's for sure, on the enterprise side of things. So keep an eye out for that. That's more of a longer term thing as well. Not going to happen overnight, but definitely keep an eye out for that there. All right, just a quick highlight here. So there is a new website called ethereumuptime.org, which is just a funny website because if you look at it, it just tells you one thing, that Ethereum has 100% uptime for every year since Genesis. Like, that's it. Like, there's nothing else to it. It's just like 100% uptime. And then there's a link to like why it matters, which I think is pretty cool. And it's just a very short kind of page on why it matters. But that's the entire website. And then they're poking a little bit of fun at Bitcoin because you can see here they made a website. No, there was another website made by someone else called bitcoinuptime.org that has Bitcoin uptime at not 100% because Bitcoin did not have 100% uptime in 2010 or 2013. Since then, it has, to its credit, but it can't claim to have 100% uptime since Genesis like Ethereum can. So really, there is no second best when it comes to 100% uptime. There's just Ethereum, right? Which is proven by objective facts. There's no subjectivity here. This is objective, and this is objectively measurable. So just thought it was worth highlighting that for you guys there. All right, so you guys have probably seen over the past few days that there's been a lot of talk around these new stablecoin chains that are being spun up. So there is a rumor, it's not confirmed yet, but there is a rumor that Stripe is doing their own stablecoin chain, and it's going to be an L1, not an L2. And then I think this was announced today, Circle announced that they're doing their own stablecoin L1 chain. Now, I was asked by a lot of people to give my take on this, and there's actually a lot of takes to give here. And I think that people spinning this as bearish for Ethereum are just not seeing the, I guess, like forest for the trees here. I think that they're trying to spin it as bearish for Ethereum because they're sidelined, to be honest. Everyone's favorite concerner was very quiet over the last few weeks because he is obviously very sidelined on ETH. But as soon as this news dropped, he was straight back to, oh, this is really bearish for Ethereum. It's like, okay, bro, like stay sidelined. But anyway, enough dunking on those people there. Giving my thoughts here. So, first thought is around, okay, why are they making an L1? Because that was the first question that everyone asked me. It's like, why are they making an L1 and instead of an L2? It makes no sense. And I agree with that. And it does make no sense. But if you actually look at what these things are, they're actually not really going to be blockchains at all. Like, if you're creating a stablecoin chain for a centralized stablecoin, and I mean, it stands to reason that the reason you're creating this is because you want to capture all the value for yourself, but also it's going to be completely centralized. So if it's completely centralized and you want to capture all the value for yourself, and you're doing it because you want it to be really performant, then why is it even a blockchain to begin with? Why not just create a completely centralized database? Why even worry about the blockchain-y stuff? Why even worry about coming to consensus on anything? Why even worry about having validators or full nodes or anything like that? And these things are EVM chains, by the way, guys. So, okay, just fork the EVM, rip the consensus engine out of it, and make it into a single centralized database where you can have all the performance that you want. It's totally centralized, which is what you're going for anyway. Why bother with the L1? Well, I'll tell you why. Is because most likely they're going to try and issue a token tied to this L1, and they're banking on that token being worth a lot because there's this belief that there's a quote-unquote L1 premium. And that, to me, is the only reason why they are doing this. These things aren't even blockchains to me. They're just databases. So why not create an L2 is another question. Well, because honestly, like as I said, they think there's a premium on L1 tokens because you can create an L2 token, of course, but I think there's a premium on L1 tokens. But also going back to what I was just saying, like L1, L2 doesn't matter. These things to me aren't even chains to begin with. They're just like centralized databases. They're essentially equivalent to people sending each other stable coins on Coinbase. Like I think, I mean, not just Coinbase, but like on a centralized exchange that has that feature, all they're doing is updating internal balances on a centralized database. So if you can do, if that's like the fastest and most efficient way to do that, why would you have a chain to begin with? Because you can have an EVM compatible database, like with the EVM database that's compatible with other EVM chains. Like of course you can. So I just don't understand why they're doing this to begin with, besides the, I guess, like money aspect of it, of issuing a new token. But then you kind of go beyond this and you think to yourself, why are people assuming that these things are going to be successful to begin with? Because there was an interesting tweet here from Vance that wasn't about this stuff, but actually got my brain spinning here. He said that, I see that SharpLink and BitMine combined buying $20 to $40 billion of ETH in 2025, most of which will be placed into on-chain borrow markets, drawing stables to loop or farm. This will be the most meaningful active capital injection in DeFi ever. So this kind of got me thinking. It's like, okay, well, why do people actually use stablecoins? What are they using it for? What drives demand for new stablecoins to come on chain, for more kind of like stablecoins to come on chain? Is it its use as payments? Well, I would argue outside of like USDT or Tether on Tron, not many people are using stablecoins as a direct payments vehicle. Okay, well, what's the other thing? Well, the other thing is DeFi. People are using stablecoins within DeFi. People are minting new stablecoins, using ETH as collateral, using, I guess, like wrapped BTC as collateral, using other assets as collateral. They want to use those stablecoins to do things. Maybe they want to go buy assets. They want to take on leverage. They want to go buy ETH. They want to do looping to farm yield. They want to put these stablecoins into AMM pools and kind of generate revenue from that and generate fees from that there. So really, I would argue that the most meaningful driver of stablecoin adoption on any chain and the most meaningful driver of new stablecoins being issued on any chain is the DeFi ecosystem. Okay, so if we take that as truth, if we assume that is true, which I think it is true, but we can just make the assumption. I'm not going to say it's objectively true. If we assume that's true, is Circle and all these other kind of like stablecoin chains, are they going to make their own DeFi ecosystems, or are they just going to be completely focused on payments only? Because I really don't think that the TAM for payments is big enough to justify its own chain. I really do think that payments are one part of the economy. It's a huge part of the economy, but they need to be able to interoperate with the rest of the economy. They need to be able to interoperate with the rest of the, I guess like in this case, it's the on-chain system, but like in traditional finance, it's the banking system, right? So when you look at it from that perspective, then I just don't see the point of a chain that's totally dedicated to stablecoins. I think stablecoins should exist on the chains where the DeFi activity is. And you already see this actually. If you go to USDC.cool, which tracks USDC issuance here, you can actually see where most of the USDC lives. Most of it's on Ethereum L1. There's $43 billion worth of it on Ethereum L1. I guarantee you that is not being used for payments because it's too expensive, right? Most of it is not being used for payments. Most of it is on there for DeFi stuff. Okay. Solana's got $8.3 billion of USDC coming in at second here. Again, I think most of that is being used for its DeFi ecosystem. I believe most of it's being used to trade in and out of different tokens and stuff like that, right? Arbitrum, 7.1 billion USDC here. Again, I don't think most of that is being used for payments. I think it's being used within DeFi. Arbitrum has a really big DeFi ecosystem. And then we can come to Base, which is an interesting case here. Base has 3.8 million USDC on it. Sorry, $3.8 billion of USDC on it. Base actually gives you free USDC transfers if you're signed up to Coinbase One, and Base is actually trying to position itself to do payments. But I would still argue that Base is not really the USDC supply on Base is not really there because of the payments. And if it is, if you say that, okay, well, most of it's there because people are doing payments, then you can see just how small payments alone is compared to everything else. So my main argument here is that I think that these stablecoin chains like have a higher chance of failure than not. I'm not going to say they're going to completely fail. I just don't think they're going to be as successful as people think they are. I do think people are getting confused about things as well, because Tether is not it does not have a direct relationship with the two Tether chains that have recently raised money. I don't think there's any direct relationship there at all, from what I know. I think that this new Circle chain is really being done as just like a money thing. I think that because Circle is public now, they need to show investors that they're kind of capturing value in other ways, not just capturing value from the USDC yield that they get from having USD in a bank account or in treasuries. I think they need to show other kind of business arms and other kind of revenue generating opportunities for the shareholders. And I think that they may believe that the fastest way to do that, or the easiest way to do that, is to create an L1 and maybe issue a token for that L1 as well, and then drive value to that in some different ways. I don't think that they've thought through this. I would love to have their kind of like take on why they chose to be in L1 instead of an L2. But at the same time, I would love to kind of get their take on, how is this even an L1 chain, and why are you even building a chain to begin with if the whole thing's just going to be centralized? Like, then just make it a centralized database. But I think I know the reason. I really do think it's because of the fact that they're going to try and do a token, and then there's just going to drive value from that. So yeah, that's my general take on all of this. There was a take that DC Investor gave that I thought was really good as well, where he basically likened what's happening with these private chains and these centralized kind of L1 chains or whatever to what happened with the internet in the 90s, where there's companies and universities would do kind of private deployments of local networks using, TCP/IP, aka intranets as we know them, even after many transitioned from old protocols, IPX and SPX. These LANs or local area networks were often air-gapped from the public internet for security and control reasons, but eventually almost all of these connected to the public internet and achieved instant interoperability due to the use of TCP/IP, the default communication stack on the internet, because the value of doing so became too great to ignore. And he argues that the same thing's going to happen with these EVM L1s, because the EVM is the Ethereum virtual machine, which eventually connect to Ethereum via L2s and other mechanisms. So essentially, you're going to see like a bunch of intranets connecting, I guess like you call them EVM intranets, connecting to the public Ethereum, and the public Ethereum is like the public internet, basically. And I agree with this. I think this is what we're going to see. But at the end of the day as well, I think that like if these things remain private, centralized, I guess I struggle to call them chains. Your private centralized things, then yeah, to me, they're not chains. They're databases that just connect to the chains. And it becomes basically like a centralized exchange. It's the same thing, where centralized exchanges have their own internal databases keeping track of everything, and then they allow users to bridge assets out from their internal kind of coffers into their own wallets and into their own wallets on different networks. And that's kind of like the public-private, I guess, relationship there. So that's how I view all of that. But yeah, we'll see what happens. I'm not very bullish on this at all, to be honest, on these chains at all. And I honestly don't think it's bearish for Ethereum. And that's actually the last thing I wanted to say about this, is that people were saying that, oh, won't this kill the momentum of ETH because everyone's buying ETH right now because Ethereum is the stablecoin chain? Guys, everyone's buying ETH right now because ETH is going up. It's not because it's the stablecoin chain. Stop. Like, I don't understand why this is hard to understand. ETH is going up. People get FOMO. People want to buy something that's going up, so they are buying ETH. Like, that's it. Like, I really don't think that most people are buying ETH because they're like, oh, well, Ethereum is the home of stablecoins, so I'm going to buy ETH. Ethereum was the home of stablecoins at $1,500, and no one was buying ETH back then. Like, Ethereum was the home of stablecoins the last 3 freaking years, more than that. And people were bearish on ETH. Like, you got to understand, guys. Like, ETH gets bought like any other asset because it's going up, right? But the thing is, and the thing that I'm kind of rambling here, but like, it's just so frustrating having to repeat this for the billionth time. ETH is a store of value. It is a store of value first. It is valued based on its store of value properties, based on the fact that it is secured by the Ethereum network. It is decentralized. It is censorship resistant. It is credibly neutral. It is programmable. It is an amazing asset. It's valued based on that. I buy ETH Not because Ethereum is the stablecoin chain, not because I think Ethereum is going to be the backbone of the financial ecosystem. I mean, those things kind of play into it in some kind of capacity. I definitely don't buy ETH because of the fear revenue. I buy ETH because I believe that ETH is the world's greatest asset. I truly believe that. And I believe that that's going to translate into appreciation of my wealth over time. It's going to protect my wealth over time. And that is, I think, the reason why most people will buy it going forward. I don't think they're going to buy it based on these other things that people think they're going to buy it on, like fear of news. Definitely not. Like, it's fear of news stuff just makes me laugh. Definitely not, guys. So that's my take on that there. We'll see how these things go. Anyone spinning this as bearish for Ethereum is retarded. Like, honestly, I think they are, because I think they're just coping. I think they're just incredibly sidelined, so they're coping really hard. And I do think that stablecoins on Ethereum are going to continue to thrive regardless of these other chains existing. I think stablecoins are going to be everywhere. And I think that the DeFi ecosystem is what actually drives the most amount of stablecoins. And I do think that Ethereum's DeFi ecosystem is about to undergo a massive explosion with all these treasury companies bringing this ETH on-chain and making it productive, because then you're just going to see the DeFi TVL explode up, going to have more stable coins coming in because of that. It's just going to be great, guys. So yeah, not bearish ETH and Ethereum. Anyone who's telling you this is bearish is not really thinking beyond their own kind of bag bias and beyond being sidelined there. All right, so the GrowThePie team has a new report out. So this is a 45-page research report in collaboration with the On-Chain Foundation, which explores how Ethereum got here. So over the last 10 years, how it got to where it is and where we are headed. So this report covers what shaped Ethereum, what makes Ethereum mainnet special, the rise of the L2s on Ethereum, the benefits of blockchain, and what's ahead. So you can go give this a read. I'll link in the YouTube description below. But just an absolutely huge kudos to GrowThePie for putting this together. I really liked this report. I got an early preview of this report. I think it was a few days ago or something like that. I read through it myself. It is awesome, guys. Like, honestly, give it a read for yourself and just get bullish. Like, that's all I'm doing. I'm just getting bullish here. And what I like about this is that it's provided me lots of content, because now I can just take screenshots of this report and tweet it out and get people to read this stuff, because most people don't like reading a 45-page report. But if I start tweeting out screenshots in bite-sized pieces, I can get them to read a 45-page report over time. And also, if you're lazy and don't want to read the whole report, you can plug this into ChatGPT or any AI that you like, and it will summarize it for you. And honestly, like, I wouldn't do that. I would just read the report, because you're going to miss a lot of context here. But yeah, anyway, just a huge kudos to GrowThePie for putting this together. I'll link the report in the YouTube description below for you to check out. All right, last couple of things here. So Taiko has got preconfs on mainnet here. So they say here that Taiko mainnet started pre-confirming blocks about an hour ago, and this was yesterday, after fixing some minor issues on, and now their base rollups seems fully functional with 2 to 3 second block times, with more to come in the next 6 months. I believe this is one of, if not the first, mainnet pre-confirmations of blocks happening on an L2 here, which is really great to see. I mean, this has been Taiko's whole thing for a little while now. This is what they've been working towards for a little while now. And I should disclose I'm an investor in Taiko here, and this is what I invested in them for, to be honest, is because they're one of the only L2s that were actually working on this, because this is going to be really important going forward for user experience, which is obviously one of the core pillars of Ethereum when it comes to, I guess, like improving the Ethereum ecosystem overall here. So huge kudos to the Taiko team for getting this on mainnet. You can go check this out for yourself. I'll link it in the YouTube description below for you to do so. All right, last up here, we have an announcement out of Spire, which again is another company that I invested in, just to disclose there. They've announced their DA Builder, which is their blob aggregation protocol. It's now live on mainnet. So this gives significant cost savings for rollups and users. So essentially what this does is it aggregates blob submissions from multiple L2s into a single transaction on Ethereum, reducing data availability costs significantly without compromising trust assumptions. So you can see here the different rollups such as OP, mainnet, Arbitrum 1, and Taiko all talk to the DA Builder, which then basically bundles these the blobs together and puts them into blob space on Ethereum. It also enables protection against gas price spikes for L2s and faster finality for these L2s as well. So if you're interested in this, if you work on an L2 and you want to get involved, you can contact Spire about this. But I remember I talked about this, I guess, blob aggregation stuff before blobs went live. So it was quite a while ago now. It's probably at least 2 years ago now or something like that. And it also, the reason why it brings cost savings is because of the fact that not every blob, like there's kind of like wasted efficiency when it comes to blobs, because when you're posting a blob, you have to buy the whole blob, right? But if you're not wanting to buy the whole blob because maybe you're a smaller rollup or maybe you don't want to, you don't have the transactions to fill that blob, instead of wasting that blob, you can fill the whole thing by aggregating the blobs together. Aggregating the data together from the different rollups and just put it all in the same blob and then you're not wasting the blob. You have like 100% efficiency of each blob, so which is really cool. Like that this is essentially making it, as Spire says here, more efficient and cost effective for rollups out there. So you can go give that a read and check it out. I'll link it in the YouTube description below for you to do so there. But I think that's going to be it for today. I will say that it shouldn't be another 2 weeks before my next refuel. I'm actually going to try and do refuels more frequently because it is really hard for me to do an hour-long episode. I mean, this is an hour-long episode, and I did it without taking any breaks. It's difficult because it's tiring. It's really hard to do. And also, I prefer like the bite-sized half-an-hour refuels than the hour-long ones. And I think I think you guys maybe prefer that too. But there's just too much stuff happening now. Like I want to be able to cover as much as possible, and obviously doing more episodes more frequently will allow me to do that. So no promises, but I will try to do another episode within the next few days. I'm not going to go 2 weeks without doing episodes again. Maybe I'll do one on, let's say, maybe Friday or Saturday. We'll see. I'm not going to make promises. I'm not going to make promises. But yeah, I'm going to do one sooner rather than later. But anyway, thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you next time. Thanks everyone.